Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, where do we investors stand? It is Friday, August the 29th, 2025. Let's get started. We will sort off by week here. There's the small caps up at the top of the list, actually small and mid caps you can see there. Gold as well, and down the bottom is Bitcoin. We will talk about all those and much more. Just a reminder, pause your video player at any time here if you want to dig into some of the detail, and sometimes I show a lot on these charts and I'd like it to be useful and insightful. So let's talk about group strength. In fact, this is not group strength, this is a mislabeled chart to start us off. Oops. More highs than lows, right? So this is the Russell 1000, that is 1,000 stocks, twice as big actually as the S&P 500. You can see, it's in an uptrend. I mean, most stock markets are in an uptrend, but really what I want to focus on here is the bottom, right? So for a market to go down and have sustained strength downwards, we need to see more lows than highs, and we need to see stocks falling, right? And so there's always stocks falling in any given market. But at this point, as it's been the case really since the bottom earlier this year, we've just had more highs than lows. So more stocks going up is bullish, and more stocks going down is bearish. And again, nothing has changed. It takes a while to sort of see these shifts change, but again, we can get caught up with headlines. But let's talk about seasonality. So of all the seasonality kind of things or data background that I like to look at, September, October definitely stand out. Okay, so there's been the most volatile periods. September actually tends to be the weakest. October actually has had the most kind of sell-offs, but again, the market has typically recovered by the end of October. And so these are the weekly seasonality bars. This is the average returns from stock markets. On the left side, we've got the S&P 500. This is going back to 1950, so that's 75 years. On the right side, we got the Toronto stock market going back to 80, so that's 45 years. But take a look at these red bars coming up here. So this is as we get into September and October. So again, we always just want to be aware, right? Markets right now, sure, they've been going up, they're extended. So we just want to be aware that, again, perfectly normal volatility would be to see some selling and maybe some backing and filling into September and October. Never has to happen on cue, but the bottom line is let's just be aware of that. From the lows of April 8th, after the whole tariff kind of global headline noise happened, you can see Bitcoin in the middle here has outperformed stocks and rallied back more than that. And you can see that the actual crypto underlying equities, which our clients are familiar with a couple of these ETFs here, BitQ and BITS, you can see have actually outperformed quite considerably, actually, Bitcoin itself. So again, we always want to be aware, right? We could always invest in underlying, we can invest in the equities. This is the same idea behind gold bullion versus gold stocks, oil versus energy stocks, and so forth. So again, there's been a fairly significant rally here in those crypto equities. Let's talk about small stocks. They were up on the top of the list. I said I'd talk about them. Let's focus on the left side first. So this is actually the small versus the large caps, breaking out of a small base. And I will kind of, again, small, definitely small. Let's go over to the top right here. It's the same chart. You can see there's the green circle. And so like, again, now when we zoom way out and we look at it this way, 15 years, we see, yeah, whatever. I don't see much to talk about, right? So we've already talked about this before. Small caps have been massively underperforming. They've been a really significant an opportunity cost is what I'm trying to say, relative to large caps over the years. And so again, if you really want to get interested in small caps, and maybe this time is different, it's possible, on the bottom right, you should be reminded that the Toronto small caps, okay, so that's Canadian small caps versus the US small caps, are coming out of a multi-year base, okay, it's starting to outperform. So the Toronto small caps and the US small caps are actually quite different in composition. There's actually a lot of resource companies and again, more of that inflationary sensitivity in the Toronto small caps. Maybe you want to look into that for more details. Just two downtrends to check in on. Crude oil, lower highs, lower lows. We did talk before when the Canadian dollar bottomed in the early February. I pointed it out, of course. We've talked about it since then, but I do have to continue to acknowledge and then point out that, again, while swings can definitely happen, I think actually point for the bottom here to the top, it was about a 9% rally. But again, this is still lower highs, and this is certainly was a lower low. So at this point, it appears that the Canadian dollar is sort of bigger picture, still bearish, even though in the short term it had that recovery. And oil is just kind of negative. There's not really much else to say. Let's look at a few stocks from around the All-in Sync pool that is managed by my team. You can see here just a variety of stocks. These are weekly charts. Wheaton Precious Metals, that's gold and silver. CyberArk, that's cybersecurity. RB Global, that is actually the old Ritchie Brothers auctioneers. And again, bottom left, Celestica. These are all uptrends. And again, uptrends will carry on until force acts against it. That is what Newton's law told us. And again, at this point, these are clearly uptrends. So look at a few Invertigo type breakouts. Invertigo is a strategy that bought buys base breakouts essentially, and some clients again are familiar with some of these names in their portfolios. And so again, just some examples, and really from a variety of areas as well. There's CH Robinson, that is in the transportation sector. You can see a big, I've circled the breakout spots or the bars here that caught my attention. There's Insmed on healthcare. Kingsoft is one of the many Chinese names here that's starting to show better behavior. And then Lennar, one of the many home builders here that broke up. Not necessarily the first one. I think D.R. Horton we've talked about before, but the bottom line is that, you know, breakouts have been working. Stocks have been breaking out, and where suddenly that demand exceeds supply, and they've been running, and that's a positive fact. Let's look at some of these foreign stock ideas here. So these are actually, there is relative strength in each of these areas. Everything from European banks, which we've talked about before, Chinese large cap, Singapore, and the UAE, all on my radar. You can see in various forms actually of short-term pullback as we look at these charts. The UAE, perhaps, there it is, RSI 5 oversold at the 50-day moving average. Biggest bar against, let's talk about TD Bank. So one of the largest banks in Canada here just reported earnings yesterday. On the left side, we've got the weekly chart. You can see here really it found resistance at the top of the 2021 highs, same spot, right? And so again, underneath, we can see this is versus the Toronto stock market. So this has been an underperforming bank. It has underperformed over the course of the last 3 years. It's shown here. So this is saying about 23% underperformance. On the right side yesterday, this is the biggest bar against. And I like to highlight these biggest bar against because it really is a sign of inflection when you have suddenly supply massively overwhelmed. And yesterday, it looks like from the high to the low, or high to the close rather, somebody lost 7.7%. So that's a fairly big range. But again, I like to refer to that biggest bar as, again, the exhaustion that essentially ends a rally. So the stock's been going up all year long, and I think we can say that there's a short-term peak. Will the short-term peak turn into a bigger picture peak? Well, that's where we zoom out, right? So when we're looking at a multi-year chart on the left, we can see, oh yeah, okay, it's at the same level. So again, we don't get to be surprised if that ends up happening. Again, that's because supply and demand matter, and again, support and resistance matter. And there's a lot of, again, imbalances that can happen, and that's why we like to look at charts. Let's look at the biggest company on earth. That's Nvidia. They reported yesterday. The stock fell 0.7%, no big deal. This is a $4.3 billion company. This is the daily chart. On the right side, you can see the slowing momentum that I'm showing here with an RSI 5 bearish divergence. That is in the short term. This is a big picture uptrend, no doubt about it. There's the fundamentals just for you know, the sake of kind of enjoying them, I guess. I love double digit, these big blue numbers that come out of market surge. You can see that there is slowing growth. Again, 56% year-on-year top line growth. That's sales growth. And on the left side here, you can see earnings. We're up 54% year-on-year. Sounds pretty good. Again, remember, market always knows what it already thinks, right? There's already forecasts. Everything's embedded in price. So really, it has to do with expectations. That's how markets react afterwards. And again, this weekend, when you're sitting here at your cocktail party and someone says to you, oh, the consumer staples companies, they're really struggling in the face of tariffs and margin compression, just tell them, you know what, consumer staples have been underperforming for more than 15 years. And just accept it. This is consumer staples divided by the S&P 500. And I think this is really important because, again, when defensive type stocks are underperforming the broader market, that is, again, showing actually the opposite is happening, where we've got offense happening. So again, the market is acting bullishly is what I'm trying to get at. Let's finish off with Sector Watch. There's the banks, a little bit of an value tilt this week. You can see there's the energy stocks, which have really been quite weak. Up at the top of the list, and down on the bottom, there's the staples, both sides of the border I just talked about. There's the utilities, healthcare, real estate. Lots of things here that we keep talking about as being on the weak camp, all sitting in the defensive side. But that's a wrap. We will finish up summer right here, and please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.